Good morning. It's Harvey Jackson. Just going to go through the chaotic day that we had yesterday. U.S. Fed stirs the market with their forward look. U.S. government shutdown as well. So the Fed interest rates cut was expected. You know, there was a 90-some% that they were going to cut by 25%. But what it didn't, the actual stock markets did not see that they were only going to maybe raise rates possibly only two times this upcoming year, and it was all based on inflation being way too sticky, and they can't kind of get it in control down to their 2% that they want. So the markets did not like that news. When I say the markets, I mean the stock markets did not like that news at all, and of course that increased the U.S. dollar, and that has a negative impact on this as well. So in this article here, there, and this was maybe missed a little wee bit yesterday. There's been a lot of news lately. We got this jackass still running the country, and will not step down. He's just, I don't see that happening. Even if he did step down, we would still have a Liberal Party, and the NDP is probably the biggest party to blame because there's been a lot of non-confidence votes, and they keep on keeping him in there. So they could get this over with pretty quick. But this article is just talking about they did pass some measures to cooperate with the U.S. to try to stop this 25% tariff. Now, I think the premiers are probably doing the most of the heavy lifting now that he's kind of just got knocked on the head here a little bit with his right hand person gone there now. So Trump Vance actually created some chaos to stop the stopgap spending bill, but in it, and it's not even posted in this article, there was 31 million for the U.S. Farm Bill that was in there. The E15 year round was also in there, and disaster assistance was in there. So I don't, if they take some things out to get funding just to January 20th is what Trump wants, it's going to make it very difficult, I think, because some of these other things actually are pretty good for ag as well. So you take some of this other funding that's been asked for, sure, uh, uh, parties aside, this was a bipartisan bill that got put in, and yeah. Anyway, we'll leave it at that. So more and more uh, uh, look that the yield is going to be even greater in the soybean crop in Brazil. It's starting to approach the 170. I think USDA is at 169 anyway and there's more and more and more aligning to bring that yield up because there's no problems with the weather. As you can see here, it's just a snippet here, but for the next 2 weeks, you're looking at an area that's pretty good moisture. And if I brought up the soil moisture, there is no deficits there. So as long as this rainy coming at the right time, almost close to ideal growing conditions, that yield could be approaching the 180 million metric ton, and that's just putting pressure on soybeans. Palm oil is fallen for the fifth session, but when we look at the chart, it's hardly down. It had a long tail, but we'll look at that as well. But what confuses me here is U.S. government funding bill released Tuesday included a plan. So this is right here in this part here, known as a year-round sales, and that never got passed. But traders said that the higher blending corn ethanol in the U.S. could reduce demand of soybean oil. I don't know, like where in the heck do they come up with these analogies? Or one is leading to something else, like oh, they're not going to use diesel fuel because there's biofuel in the or ethanol getting produced. Like they're not the same. They're different mixes, right? I just don't understand. Like it's just one does not equal the other. So let's just look into the markets here. Canola's up. It looks like a buy here. Rapeseed is also up a little wee bit as well. Soybean oil is back up, uh, half a penny about. And palm oil is, when I took the screen grab, it wasn't down. It's actually up a little wee bit. And then your wheats are down, and the Canadian dollar is just basically flat there, but below 70. So here's your March canola. So you got a little bit of green tail here, and did not get the full retracement. But it looks like it could be a buy here, even though this is not a signal here on the slow stochastics to buy. I think it still could be a buy for some upside here. So guys with the brokerage accounts, maybe talk to the broker about a reentry strategy. And I think Kyle has the reentry strategy at 603 to get out at 630. So you're just going to try to capture this wave from here. So yeah, let's just maybe reach out to the broker and have that discussion. November canola, there's a gap here now. It's up a little bit. When doubt, we fill a gap there today. This is from John DePape. He's got the trading floor app, and I'm just why I grabbed it is just looking at his pace for exports. and who's actually bought so far is on here as well. So maybe you want to pause here and have a look at some of this, and it's not completely up to date. I think there might be a little bit more yet to go on a weekly basis, but yeah. So anyway, here's my projection, and this is actually 85% of the 10-year average, Olympic average. Of course, when you do that, this was almost identical to the number that I had using the 90% of the yield for the last 10 years, decrease in yields. So if the U.S. or the StatsCan came out with the yield at 36, they usually still play the actual yield, so we'll see where that ends up. It could be even tighter, right around the 17 million rather than 17.8 that they came out with. So, rapeseed, it's pulled back from yesterday's high values, and it's sitting at 191, still unbelievably high. So rapeseed here, May contract, just showing a little bit farther. There is a gap here, but you look at where the height of this trading range is, and they haven't pulled back near like what the canola did. Soybean oil going into the basement here, but it's still sitting around that 23.6 retracement value or just below it now. But you can see that these lows were made way back in August and went higher, and we're trying to approach this one here now. So we'll see if this is going to have a recovery. It's got a bit of a green day today. So here's your palm, and we've had this wave. No selling here. You pick up selling here, no selling here. I went out, there's some buying here, and they're selling here, no selling. Right? Like there's no interest. So this wave will actually kind of create a buying interest on the dips. So we'll see if that actually starts to happen here. We'll probably get news of that after the fact. Soybean March broke through. This is the complex that actually probably dragging us the farthest and fastest here. A lot of guys that had their brokerage, we did take some profit in that leg. I am not poised and ready yet to get on a long on this. Not with that South American crop. Canadian dollar, it's just it's like a bag of bricks going in the lake here. It's sinking, and I'm not certain what to do with this trade here yet either. When you're in the bottom of your uh, overbought, oversold positions, it's just ugly. So here's the potential we can get down into these 68s, but we do not want to be in there. That is basically a disaster for the Canadian economy. You can say it's good for basis levels, but I guess we got to use our tools and toolbox to do something about that. But the majority of the time, you're way above that. So that's what I'm looking at. If we can get into these ranges again, that'd be great. Wheat. Approaching our full retracement values, and the Chicago wheat actually blew through it. And then your hard red winter is approaching it again as well, or full retracement. Milling wheat, the opposite. It's actually going up away from these, and we need to maybe take some direction from the French Matif wheat here. Corn, it's still in an uptrend, but a couple of bad days here as well. And yeah, that's all I have for you today. Take care.